Okay, thank you everybody. Thank you for your patience. I know it's been a long day and we've had lots of discussion. There's been lots of information to take in. This is our final panel of the day. And I know that we've had some excellent panels already. I was talking earlier that we had another panel on stage 2, which was relating to crypto. And I'm told it was an excellent session. So when these sessions are available to watch on demand, post-event, make sure you do check out that session as well. But we're going to be discussing crypto here right now as well. And we're going to be asking the question, good luck answering these questions, by the way. The question is, investment in crypto risky or rewarding? And we've got insights from Campsor Capital that hopefully are going to give us some of those answers. So crypto, the new frontier, if you like, in finance. Many people want to dip their toe into investing in this, or already are. Lots of consumer investors, of course, but maybe they lack the understanding or the confidence to do so, or to do so in a sensible, prudent manner. Others are jumping in without thinking, and in some cases getting badly burnt, as the crypto is so volatile. So what exactly is the deal with cryptocurrency? Should you be investing in it? And how risky is that? This is what we're trying to answer, these really difficult questions. So we've got 3 experts from Campsor Capital, a market-neutral crypto hedge fund. To my left is Antonio Vulcano. He's a partner and PM at Campsor Capital with more than 15 years of experience modeling and trading equity derivatives for various financial institutions in the UK and Switzerland. Most recently, he's been heading structured finance trading for EFG Bank, and previously was a deputy head of equity derivatives at Mitsubishi Bank of Tokyo and bookrunner of various exotic books at Deutsche Bank. Next to him is Arianna Luna, partner at Campsor Capital, with a strong background in traditional finance with experience in top-tier financial institutions. She started her investment banking career in London, working at Morgan Stanley, Nomura and MUFG. She's highly experienced dealing with complex derivative and financial products, having assisted sophisticated clients across the whole EMEA region. And finally, we have Piervanni Ugolini Mugelli, partner and PM at Campsor Capital as well. Piervanni describes himself as an entrepreneur with a strong reputation in the crypto sector for versatility and adaptability. Now, he's one of those fortunate people who discovered Bitcoin at the very early stages, just 1 year after it was created, when the price then was only around 30 cents per Bitcoin, right? I hope you invested wisely and are going to share that with us at the end of this session. He's got an extensive network in the digital currency and venture capital spaces. So hopefully, perfect people to shed some light on crypto and where we're at. So please welcome your panel.
Thank you.
Okay, so Piervanni, I'm not going to start by asking how much Bitcoin you've actually currently got. Okay. I am going to start by saying, what types of people are currently investing in crypto, would you say? And why are they doing it? Why is it a desirable option for them?
Yeah, so I think it's interesting to understand which kind of player are involved into the sector. I think which kind of investors. So I think there is 3 main categories of investor in the space. So you have crypto natives like me. Then you have, I will say, crypto bulls. And then just the last category is just people who are interested in the space. So the first one, crypto natives, are people who have made their money through crypto. Yep. And nowadays they are still invested a lot into the space, but they understand that there are market cycles. So they understand that there is a bull market and a bear market. So I think probably this category have around half of their capital invested into the crypto space, and other half just liquid, so just to pay the bills, to live longer, to see the next bull market. So then you have, I will say, crypto bull, like Sailor with MicroStrategy. They understand what Bitcoin is, what crypto is, they understand the technology, the promise, the opportunity, and they want to have an exposure to the market, but they want to have more. So sometimes they even go with leverage, like MicroStrategy. And then the last category, which is people interested into the space. So this categories is composed by retail, but also family office, institution, pension fund, which they have a basic understanding of crypto. Maybe they don't have been down the rabbit hole, so they don't have a full-time exposure to the market, but still they don't want to be left behind. So these categories usually allocate around 1 to 5% of their assets to the space, just because they see Bitcoin and crypto in general as a huge opportunity. So you can think at it like buying a call option on the future. So if crypto will go to zero, you will lose just the premium, just 1 to 5% of your assets. But if Bitcoin will maintain its promise, and if it will replace the financial ecosystem, then the payoff will be incredible. So I think those are the main macro categories. And why they are doing so? Well, for that reason, so buying a call option on the future.
So when you break it down into those three personas, let's say, or those three groups, how much are they actually investing? So you broke them down into those three personas. Yeah. Which is the biggest in terms of total amount that they're investing? Is it the consumers who are just going along for the ride through fear of missing out?
Yeah, I think, to be honest, crypto natives still represent a lot into the market. So probably, I don't have the exact number, but if I have to make an assumption, I will say 1/3 of the total market is still owned by crypto natives. Not just one individual, but thousands of crypto natives. And then for sure you have permabull, like Sailor with MicroStrategy. But I think the most promising categories is the last one. So people interested in the space, because if you have a huge pension fund which decide to allocate just 1% of their assets to the space, still that's a huge number. So I think that's is where everyone is focused at right now.
Okay, Arianna, going to bring you in here now. What are the biggest challenges when investing in the crypto market?
Sure, no, that's a very good question. I mean, although crypto obviously has been around for more than a decade now, but there's still challenges being faced when wanting to enter the space. I think the first challenge, which is a very practical challenge actually, is how do I access crypto? So how do I move from a fiat system to a crypto system? So the very first challenge is, how can I deposit fiat currency onto an exchange, for example, to buy my cryptos? And even more so, how can I withdraw that fiat, that cash, from an exchange onto my, Barclays, HSBC, Citibank, or whichever other bank account? And a lot of the challenge comes from the fact that there's, limitations from a regulatory point of view, but also restrictions or policies within banks that forbid any interaction with crypto assets, not because they necessarily have a negative connotation, but because there's still a lot of uncertainties and there's still a lot of risk for banks being exposed to the asset class. So this is certainly, I think, the most practical challenge. Then once that step has been taken, I think that the next challenge, I think especially for maybe less sophisticated investors or retail investors, is how do I deal with the volatility of such an asset class? Obviously, we've all seen, Bitcoin, but all the entire crypto market being very volatile in the last, 6 months or so, since May. Although, volatility has come down a little in the last month or so, but still, it's a very, very volatile asset class. So that's a big challenge. And why is it so volatile? Because is an asset class that is by nature speculative, or still, at this stage, and the market cap, the liquidity are still relatively, they're still small when compared to traditional financial markets. So, we just need a so-called whale investor, which are basically large holders of crypto assets, to make a large transaction, and that can move the markets. Look at what has happened with Elon Musk tweets in the last 6 to 12 months. That has the power to move the markets. And then I think the next challenge is security, safety. So that really there's two aspects to it. One is how safe is the counterparty that I'm dealing with, simply the exchange I'm interacting with, or the DeFi platform for whoever in the audience has had any exposure to decentralized finance. And then there's a question of how safe it is to hold my Bitcoins or my crypto assets. Where should I keep my crypto assets? Should I keep them on an exchange, or should I put them on a USB key on cold storage? And I think until we'll have some clear regulatory framework to help also shape the safety of this asset class and the holdings in this asset class, I think we need to be able to manage these risks. That might mean performing a due diligence on the counterparty I want to interact with, whether that's a centralized exchange or a DeFi platform. That's rule number one. Rule number two would be to diversify, obviously not only your portfolio, which is investing 101, but diversifying also your counterparty risk. So don't buy all your Bitcoins or your cryptos and hold them on Coinbase, but maybe buy some on Coinbase, buy some on FTX, buy some on Binance, or whichever other platform you want to use. And these, I think, are the key challenges, at least when starting, at least to deal with crypto assets.
Yeah, and obviously you talked about the volatility there, and you talked about the risk. So bearing that in mind, would you say that crypto is more suited to long-term or short-term investments, or does that depend on what kind of investor you are, right? Because if you're speculating, I won't say the word gambling, although sometimes it does feel a little bit like that. Whereas I've heard some what I would call serious crypto investors are saying it doesn't matter about the volatility. We're looking 10 years down the road here. So my question is it suited more to long-term or short-term investment?
I think you rightly said. It very much depends on which type of investor you are and which investment approach you're taking, and also how expert are you. If you believe in the underlying technology, for example, of Bitcoin or of Ethereum or whichever other crypto technology that you're looking at, then probably a long-term investment program is more suited, because yes, you'll be exposed to the volatility, but in the long run, if you believe in the asset class, if you believe in the technology, you shouldn't really be worried about short-term swings. The same as, if you're 25 years old and you're investing your pension money, you're probably not investing in money markets. You're probably investing in equities, because you're not worried about the short-term swings. But if to the contrary, you're probably you're a very, you're an expert investor, you know what you're doing, you know the instruments, you know the market, then probably you can also afford to invest with a short-term basis, because you know what you're doing and you know how to exploit market opportunities and arbitrage opportunities, which is actually what we do at Campsor Capital, for example. But then you need to be, you need to know how to place your investments and how to deal with volatility and all the risks that are associated to it. But then I also just wanted to add one more point. When we're talking about investing in crypto assets, I think in a lot of people's mind is, shall I buy Bitcoin? Shall I buy Ethereum? And when shall I sell? When it's gone up 15%, should I sell my Bitcoin? But investing in crypto also means investing in an ecosystem. And there's a lot of investors out there who have a venture capital type approach, and they're not necessarily just investing in crypto assets, although there's like thousands of crypto assets out there, but they're investing in the space, meaning they're investing in providers of custody solutions, they're investing in providers of mining solutions or audit solution for smart contracts. Like an example is, Goldman Sachs recently has deployed almost $90 million of capital as an investment in Certic. Certic is an auditor for smart contracts. So that gives you an idea of how important those aspects are also when thinking about investing in crypto. And then just to answer your question, that would be more of a long-term type of investment because it's a VC type approach.
Sure. Okay, I just want to gauge the audience here. How many people, just by a show of hands here, how many people have invested in crypto and currently have those investments? Still most people. Just for the benefit of people in the virtual audience, I'd say it's more than half, maybe 2/3 people said they had invested and pretty much all of them still had that. So when you, if you just put your hands up again, please, if you have invested in it. When you did that, how many people feel that they knew enough about what they were doing? How many people are confident in what they were doing? Okay, there's been a big drop in hands just for the benefit of our virtual audience. Okay, it's good to know that some people were confident in the investments they were making, but the rest of you were just getting along for the ride, right? Because you didn't want to miss out. Is that fair to say? Yeah, there's a lot of nodding going on. Okay, I'll come back to you a lot later. Antonio, time to bring you in here. The introduction of CBDCs, and maybe you should explain what they are. I'm sure most of our audience know. How will that affect the crypto investment space?
Yeah, this is a very, very important point. So for who doesn't know what they are, basically CBDCs are digital currencies issued by central banks. And probably you'll be reading about this. So there are different opinions, but we'll try to be blunt and say what we think about this. We expect that if central banks come in with digital currencies, this will have a massive boost on the whole crypto environment. Why is that? That's because one of the catalysts probably for the growth of this asset class is the investment coming from professional investors, from the institutional investors, and as it has emerged also from the previous questions. And the institutional investors obviously will need a certain type of environment to come in. Now, the way to land into digital assets is, of course, investment in stable coins, which is linked to fiat currencies. So it is a platform basically where you will land and you can explore. And as you said, you can understand a little bit better of how everything it works and then decide your investment into the crypto space. Now, if central banks come in, basically the central banks will give legitimacy to the whole sector and create these large platforms where the institutional investors can come in and has a base from where they can move. So we expect a massively positive impact on that. One question that obviously will immediately emerge is how these digital currencies issued by central banks will be integrated within the existing crypto environments, because obviously the central banks will come with their own rules, and so we don't know if there will be the possibility to trade in these assets within the same environment with other digital assets. If that is the case, then we expect a massively positive impact.
So from your point of view, what would be the best outcome of introducing these central bank digital currencies?
It will be the participation to the crypto ecosystem of institutional investors. And so it means large amounts of coming in, which are obviously as important as the retail base, but obviously in terms of size, in terms of volume, in terms of sophistication, will give a completely different scale to the whole industry.
And as well as the scale that a decision like that would make, it also adds a degree of legitimacy, right? And is that really important still for crypto, would you say? I'm going to ask this for all of you because obviously with so much volatility, so much risk, so many people here who've invested without really a clue in what they're doing and maybe have lost money or maybe gained money, does crypto in the public perception, does it need to gain credibility as something that is stable, that people will be happy to invest in rather than speculate on?
Well, I don't think there is still the need for validation from a third party because nowadays crypto is a $1 trillion industry. So the thing is that you will see a lot of failure into the market just because it's a new market. So it's like having, being in the Silicon Valley. You have a lot of different startups. So you have Bitcoin, Ether.
Yep.
Those are the major one. But then you have hundreds, thousands of different tokens which related to project which are just startups. So like all the startups, there is a 99% probability of failure. So there will be failure in the ecosystem, but those are just new ideas that try to get validated. So the thing is that 1% probably will survive, and that will change the financial ecosystem forever.
Yes, if I can add, yeah, I agree with Piervanni, and probably one element to add is basically the essence of how we look at crypto assets, because we heard, obviously everybody has heard a lot of discussion. What is it? Is it a currency? Is it a reserve value? Is it something else? We expect that, of course, there will be some specialization in that sense, and so obviously a digital currency issued by a central bank will be a reserve of value automatically, and it will be a system of payment. It will serve for that use. If we look at other tokens, you can look at them more as an investment in equity, or you can look at Bitcoin more as a digital currency. Somebody's talking about digital gold. So basically, these digital assets at the moment are hybrid assets that contain elements of different types of assets in other categories. And this is also, I think, confusing a bit every investor. And so it is pushing a little bit back everybody on the fact of the will to invest. So the entrance of central banks will clarify at least that role for stable coins. There will be competition with stable coins issued in, let's say, into the private sector, but then that will be created one category. And then you will have a certain type of tokens which are already blue chips. You have Bitcoin, Ethereum, maybe a couple more. And then you have investments in new projects, in new ideas. And that's the part of innovation, which are all the new coins that come and grow and disappear very quickly.
Okay, all right, so let's talk about what your forecast is, Antonio, actually, for the market recovery within crypto. Where do you think it's going? What's the trajectory, and where do you think it will be in the next, let's say, 12 to 18 months?
Obviously, that is very difficult to assess, but one key information that we extract from the last year is that the correlation between digital assets and traditional assets has increased massively. Nowadays we see Bitcoin or Ethereum, so the blue chips, moving in line with the S&P or the Nasdaq. Obviously with a higher level of volatility, but in terms of correlation, it remains very strongly correlated. This is telling us two things. There is a positive side, let's say, and a less positive side. The positive part is that digital assets have been already recognized as an investable asset. This means that investors that have a part of their portfolio in equities probably have some investments already in cryptos, and they will move together. On the other side, probably the digital space has lost the singularity that has distinguished this investment over the past years. 3-4 years ago, when Piervanni started to invest in Bitcoin, it was, I won't say that it was easy to make money. Obviously, you need to have the courage and the intuition to enter into this space. But at that time, it was possible to buy one asset and have this explosion in value. This is not possible anymore, probably. So this is gone. But that doesn't mean that this asset class doesn't have opportunities. And actually, we see a set of incredible opportunities compared to asset classes. The difference now is that you will need more attention to select and analyze the investments where you want to put your money. And probably, in order to be profitable, you need to enhance the quality of your strategy. So this means that the investor has to be more sophisticated.
Okay. Are there any questions from the audience before I carry on here? Yes, we do have a question. Could we get the microphone down here, please? And another question down here as well. I realise you asked a question in the last panel, but if you can just state your name and where you're from again, please.
So, Luis Lancos, Elevon. Love the conversation. Okay, absolutely love the conversation. Loads of questions. I would like to start with one statement, right, before the question, which I have a slightly different point of view, which is, you said that when we lower down our arms, right, because we didn't know enough about crypto, you assumed that it's because we are just going for the ride. I have a different point of view. I think the ecosystem of crypto is so complex at the moment and evolving so fast that nobody in conscience can say, I know enough and I know what I'm doing. I think the right attitude towards crypto is actually, I'm studying as fast as I can. I'm looking at the ecosystem and trying to understand where it is and where it goes, right? And so that would be probably my position, and I guess other people like me. Now, regarding the question, you touch, I think, incredible important point, which are the CDCs, right? I've been reading about that, and one thing I realize is that actually the central banks, they are not following neither a distributed model, and we understand why, and they are not necessarily following the same blockchain technologies, not the same principles, because they are looking from a completely different perspective and different angle, right? So that means that when they appear in the market, if they appear, I agree with Wally, will have a huge impact, right? Because, and will give some credibility in terms of what is the digital currency. But what is not clear, if they are not distributed, and that is one of the fundamentals of the crypto market, it is distributed, right? So if it's centralized or semi-centralized, if it's not blockchain technology, right? How we expect that they can integrate it, and if they are fundamental different technologies, then would that not expect to create actually a knockdown into the existing crypto market that is based in totally different assumptions?
No, this is a very, very important point, of course. But when we talk about decentralization, there are two aspects. One is the technological side, and the other one is I would say the governance of the token or the currency. So on the governance side, I agree that will be different from the principle, so from the philosophical principle of the digital industry. But that is already existing into the private sector. We know that there are a lot of coins where there is a centralized control, and the purists will tell that only Bitcoin is really decentralized. The other ones are not. So on these points, I do not have probably I will not go beyond that, because also it's not our interest. We're looking at this market from a speculative point of view. We are trying to understand how to invest into this asset class. on the technological point of view, we see that the central concept of digital assets, which is the distributed ledger, which is a shared set of information which is common to all the participants, is going to be dominant. And so if the central banks come in with that, that will be integrated with all the other ecosystem, meaning that on the blockchain, whichever it is, you will see transaction, and so a transfer of value registered into a common ledger from one to another. So probably there will be a different technological solution, but the principle will remain the same and it will remain shared. So we see from the technological point of view an integration rather than a competition. At the moment, this continuity in some way already exists because there are few banks or few actors in the market that can transfer value from the fiat world into the digital world and vice versa. Having a central bank doing this activity with a technology that probably will be developed with a certain type of resources, I think will add a massive value into the whole chain of the distribution of value and investment. So this is my take. I would distinguish the two aspects.
And if I can just add a point, I think although probably the technology might be, there's certainly going to be nuances, because we're talking from one end about a really distributed, ledger, distributed to a certain point, depending on the currency. And when it comes to central bank digital currencies, we're talking about a private blockchain, so that's by nature centralized. But still, I think the fact that central banks are looking at blockchain technology, although it's centralized, but blockchain technology still, that's sort of a validation of the technology that's underpinning crypto assets. I mean, that's a massive statement out there. And although there might not be necessarily any an immediate benefit for the crypto space, but you have central banks all over the globe saying, well, we like blockchain technology. We actually think we're running late, so we're trying to catch up with it. So I think that's certainly a positive for the industry.
Sorry, can you just wait for the microphone, just so our virtual audience can hear your question as well?
That's a very good point. But because there are the blockchain is so slow on transactions. I don't know, I'm from payments, right? But it's so slow on transactions. What I've been reading is that most of the central banks, and I don't know the insights, but they are looking actually at divergent technologies from blockchain to allow faster transactions. And that will create some potential incompatibility. And right, so.
Yes, I mean, I don't. To be very honest, I don't know about the details of the technology that central banks are looking at. But even when you look at the pure crypto space, without looking at central bank digital currencies, there's, as I'm sure you're aware, there's many developments when it comes to technology, like layer 2, layer 3s, that look at ways to improve the speed of transactions. Yes, we're not probably at the same speed as Visa or MasterCard, but there's certainly huge investments and huge effort that's being put there. But then there's a lot of other positive. So it's always there's always a balance there.
Yep. If I may add, in the previous panel on cryptos, there was a discussion about the settlement cycles in the traditional asset classes and in cryptos. And of course, there's been a lot of discussion about the fact that, for example, in equities, we've been used as settlement in T+2, T+3. Obviously, there are different reasons to do that. The limitation is not only technological, potentially it could be compressed. So there are many reasons why the settlement happens in a longer time. And in comparison, the settlement on the digital asset is instantaneous. So that is now. In relation to this point, the strength of on the digital world is that as we pointed out, is the technology and is the concept of the blockchain, where everything is shared and is written once and for all for everybody. For us, this is a particular point that we feel a lot. I've been trading equity derivatives for a long time, and I've been fighting with my bookings, the bookings of the middle office, of the back office, the audits, the counterparty, the broker, the system used by the finance department, and so on, the accounting. You will have like probably the same trade booked in and reported in 10 different systems, potentially with different informations, which is not homogeneous, potentially with some errors. The strength of this of the shared ledger is that the transaction is shared, is there once and for all, and is eternal. So I think that the technology will add some value also into the traditional financial system.
Yeah, this is almost a separate discussion in itself, isn't it? It could be another panel. Did I see another hand up? Yeah, could we get the microphone over here, please? Sorry, could you just put your hand up again, please? Over here, Alex. Just over here, thank you.
Hi, Marietta Fried. I work for a family office, so we invest in things like what you're doing. I have a much more basic question, but you're touching on it. So when we are presented about Bitcoin and all of that, I hear some fundamental ideas. And the fundamental ideas, one thing is that it's going to take over for transactions. You guys just started speaking about the speed. I've read and heard that the transaction speed for Bitcoin versus Visa, MasterCard is something like 10 to 1,000 per second. I don't know exactly what the numbers are. So my question to you is that true? Secondly, the other thing we were talked about, okay, is that it's finite and that's why it's a great thing. Okay, it's still finite, that hasn't left. But what about, what about the idea of it being anonymous? I mean, at least last year, people were still talking about it being anonymous, but now with all of the platforms that we need to register in order to buy it or whatever, it no longer is. Not that I'm saying that that's the key reason, but does this now somehow make Bitcoin not as appealing? And then, because these are the two main, Bitcoin and Ethereum, how does that affect Bitcoin with these key selling points no longer existing?
Yeah, so in terms of value proposition of Bitcoin, I think that, yeah, in the past it was proposed a lot for transaction, for payment, and that was the original idea. So a cash-to-cash, peer-to-peer cash payment system. So that was the original idea. I think nowadays the value of Bitcoin and other blockchain in general are the certainty of the settlement. So the huge value is the settlement layer. When you register a transaction on Bitcoin, you know that the transaction, after it gets confirmed, is safe. So no one can revert it, freeze it, or do something about it. So you can register various data on the blockchain. So you can register like a movement of Bitcoin, but you can also input data like buying and selling of real estate or something like that. So in some state, like I think in Georgia, they do their buying and selling of real estate through blockchain, through the Ethereum blockchain. So that is, I think, the biggest value proposition. So the certainty of the settlement layer. So it's like having an Excel, but that distributed all around the world and without any single point of failure. So that is the major point. Then you have for sure the fact that you can transact it through just simple payments, but that's not the biggest value proposition of Bitcoin. There are some competitor blockchain like Solana, Ethereum, etc. that are trying to scale in that regards. Some blockchain have been successful at doing so, but I still think there is a lot of work to do. So Solana, I don't remember the exact number, but can process a lot of transactions. So probably nowadays Visa and MasterCard still have a better solution. But if you are trying to see how much energy they consume, a lot of times they say that Bitcoin consume more energy than all Iceland put together. But if you see at the system used by Visa, you have the intermediary bank, Visa, your bank, the bank of the merchant, all through server. So still is close in terms of energy consumption. But I think this is the biggest value proposition, so the certainty of the settlement layer. And in terms of the second question, the anonymity, I think that, yeah, in the past that was true, but in reality, when you transact Bitcoin, you transact from one address to another address. And for sure, you will have an initial transaction where you fund your Bitcoin, or you have a final transaction when you spend that Bitcoin. So that sometimes can happen through an exchange or another venue. So for sure there will be one point during the life of your wallet in which there will be a transaction which is traceable. So usually government prefer transaction through Bitcoin, Ethereum and other blockchain just because they are easy to track. There is a lot of private companies that sell you service for tracking blockchain transaction and to identify various wallets. So internally we also use this kind of software to understand if there is a huge fund which is trying to sell Bitcoin to buy Bitcoin, we know in advance. So also I think it's more transparent. Bitcoin is more transparent that probably the majority of the financial ecosystem right now, just because everyone can see it. Everyone can go on the internet, on the blockchain, and look for the information of a single transaction. So everything is public. You don't have to need to ask for a warrant from an authority. You just can go on the internet and look it by yourself.
Well, I think this, I'm going to come back to your question here, because I think part of the question was, what if somebody wants that anonymity? And if Bitcoin and other currencies, part of their promise or appeal to a certain number of people were the fact that it was anonymous. And if that is no longer the case, or if that has been stripped away, then that currency immediately loses some of its value to somebody who might want to remain anonymous. Was that the question? Yeah.
Yeah, so in that regard, I think there are some alternatives for sure. So there are coins like Monero that allow you to have full anonymity. But then the regulator, in many countries, a lot of regulators, they banned, they put a ban on Monero or other laws to disincentivize the use of it. So it's clear that the future is not going in that direction. The regulator don't want it, but even you as a retail, yeah, you can use it, but there isn't a huge advantage on using it. So
I think if I can just add a point maybe to address your question on anonymity again. I think nothing really has changed when it comes to Bitcoin technology. The Bitcoin that you were able to trade 10 years ago is exactly the same Bitcoin you can trade today with exactly the same features of anonymity. You know, your address is an alphanumeric string. Nobody knows, you know, that there's you or me or anyone else behind that address. I think what has changed is that, you know, regulators want you to perform KYC, or want, you know, exchanges, for example, or trading platforms to perform KYC and AML checks on their users. And that's when you disclose your identity. But which can change somehow, you know, the value that you assign to the underlying, to the coin that you're looking to buy. But as Piervanni, first of all, you can still, I mean, there's still exchanges out there that don't require KYC. Probably things will change, but that's still the case. I'm not advising to use those, but that's an option that's available. And two, as Piervanni was saying, you disclose your identity when during the ramp on and ramp off process, as they're called. But during the entire transaction span or investment lifespan, nobody knows that there's you behind that, alphanumeric string. So I can go on Blockchain Explorer and see, what did this address do? But I don't know that there's, this lady or myself or Antonio behind performing those trades. So there's still a level of anonymity. But I do understand your concern.
Does that answer your question?
My question is not necessarily about whether I want to do it or not, but I think that a lot of the value. My question was not if I can do it or not. My question was, I do believe that in the beginning, a lot of people were saying that a lot of people were using Bitcoin specifically in order to hide their money from the governments. And therefore, the value had gone very high up. I'm asking if this anonymity does no longer exist, do you think it affects the price of Bitcoin?
I think it already affected. So that use case can be of interest to a lot of people. For sure, you can go on CoinMarketCap, see the valuation of Monero, and that use case is all inside that market cap. So hundreds of millions of dollars worth of use case for anonymity. And I think it's already separated. This is already separated from Bitcoin.
Okay, we'll move on because I've just got one more question I want to ask before we wrap things up here. Piervanni, I'm coming to you again here. What's your advice? I'm sure this is what everyone wants to know. What's your advice to anyone considering investment right now in crypto?
Yeah, so I think with the assumption that we are...
I think I have the solution, invest in Campsor Capital.
Oh, well, yeah. That's another answer.
For my assumption, because we are FCA regulated, but this is not financial advice, so... Now you can. So I think a lot of the traditional advice that can be applied to traditional financial market can be applied to crypto. So first of all, don't be a victim of FOMO, fear of missing out. So don't put, if you decided to invest into the space, don't put all your money at once into the market. Just do a simple dollar cost averaging. So split the amount that you want to invest into more tranches and just during a medium to long period of time, just buy the market consistently. So if you want to invest 100, don't buy 100 Bitcoin right now, because the big assumption here is that you have to understand that you are not smarter than the market or other market participants. So by assuming that you are stupid, you will never make an error here. So first of all, dollar cost averaging into the market. And then the second advice that I think it can be applicable to crypto is don't, by taking the first assumption of don't think you are smarter, don't try to buy lottery tickets. So there is a lot of crypto, of different cryptos around. So you may be tempted to buy the coin number 500 for market cap. You have to understand that there is a 99.99% of risk of losing money. And if you understand just, you say, I understand, I invested $10,000 there. Okay, for making back those $10,000, you have to invest $100,000 for 1 year at a 10% return. So people don't understand how much those $10,000 really worth. So try, if you want to get an exposure to the market, go for Bitcoin, go for Ethereum. If you're really risky, go to the top 10, top 20, but preferably the major ones, so Bitcoin and Ethereum. Why? Because Bitcoin has been around for more than a decade. The technology is really established, it's proven, it works. So the chance of losing money are reduced in respect to buying coin number 500. So those, I think, are the main two advice.
Okay, thank you very much. Look, we're out of time. We've actually gone over time. So thank you for staying with us. And thank you so much to Antonio, to Arianna, and to Piervanni. Thank you.
Thank you.
Thank you, everyone. Thank you, guys. Please, mate.